Are you ready to improve your trading drastically this year? As a trader, we always need to be analyzing both our losses and profits in order to adapt to the ever-changing stock market. In this video, I'll explain my 5-step plan to improve my trading performance in the new year and demonstrate them with my actual live trading examples. These live trades, which includes both wins and losses, will help you understand the reality and the process of day trading. If you're ready to learn to trade better and maximize your profits this year, then please remember to smash the like button and get ready to join me on the 5 steps to fix your trading this year. Step number 1. Trade small cap stocks with improved risk management. The first crucial step to adapt in the market this year is to use extremely meticulous risk management if you're going to be trading a lot of these low-float small cap stock runners. Small cap stocks have been coming back to the stock market since the winter of last year, and there are many profitable opportunities to take advantage of if you have a set of criteria to scan for these stocks and plan for your trades with proper risk levels. Small cap low float stocks are stocks that are typically ranging from a couple of dollars to less than $20. This means their pricing is friendlier to newer traders as you don't need as much capital to trade, as opposed to the large cap stocks that are priced at a couple $100s, like Nvidia. However, you should know that small cap stocks, which I used to call them small cap stocks, tend to do a lot of random pump and dumps and extreme short squeezes. While the more experienced traders will be very excited about these volatility and the price ranges to profit off, beginner traders who lack discipline and risk management skills can easily lose their entire account. Nevertheless, if you want to adapt to this year's market and improve as a trader, you should be anticipating more and more of these 100% pre-market runners that can turn into 500, 600% squeezes, such as MLGO, CCCC, and POL. I'll be showing you a live trading example later on how I shorted a small cap stock, CCCC, and you'll be very surprised by the result of the trade. One of my personal favorite strategies is short selling small cap stocks. I look for strong resistance areas on the daily chart formed from the past selling pressure to short into. And on the day of the new gap up, these backholders are finally able to cash out of their shares and dump on the stock, along with potential insiders, dilutions, and all that sketchy business in small cap stocks. So this particular strategy used to be very profitable a couple of years ago. However, I definitely want to be more cautious this year because I've observed that the trading volume on these small cap stocks are increasing drastically. And with short selling being so available nowadays, there's a lot of random short squeezes the past year. While this still is a high win rate setup, the risk has increased drastically. If you're actively short selling overextended small cap gappers, here are my recommendations for this year. Understand that the trading volume on small caps should be higher this year compared to the last 2 years during a bear market. Be very careful when you plan on shorting the top gainers on the day, as they can be overcrowded, leading to short squeezes. Actually, a lot of times they lead to 2 or 3 squeezes before the final drop. Plan and follow your stop losses very strictly and use multiple entries to scale in instead of one and done. Once again, the key to surviving and actually profiting from small cap stocks this year, whether you're long or short, is risk management. If you learn to cut your losses quickly, then you can avoid the potential big blow up loss and survive another day in the market. Okay, the live trading recording that I'm about to show you is a gap up short on CCCC. In this trade, I messed up my executions and made a couple of mistakes in which you're gonna see really soon, resulting in almost a $5,000 loss. However, the key reflection here is that my P&L could have been a lot worse if I did not cut my losses quickly and acknowledge my mistakes. Okay, here we are on TradingView. We're looking at the daily chart for CCCC. The day the trade took place was on this particular day over here. You can see this thing literally ran up from $1 to $2, then from $3 all the way close to $6 on this long breakout candle. And next day I traded it was this one. So if you look at the intraday chart on this particular day, you can see pre-market, this thing had already gapped down a little bit from prior day's close area around 560s. And a lot of times when you have a first gap down day on a stock, small cap stock, that ran up for multiple days, 1, 2, 3 days, and you have a gap down pre-market, a lot of times that signals that this might be the start to the end. So my plan on this particular day is that with a gap down pre-market, I'm going to use that 550s as my risk area to short into. And potentially I'll get downside all the way to 430s, potentially lower to 370s. Like I said, it's very extended. So a lot of downside to go for the shorts. And then that area around $5.50 to $6 is going to be my risk area. Again, that $6 came from the highs from the day before. Did you know you can get up to $6,000 worth of premium trading tools all for free? As part of the new promo from Centerpoint Securities, you can now open a new trading account and access Trade Idea Scanner, which is my favorite scanner by the way, Benzinga Pro, TrendSpider, and Dilution Tracker. They're also offering you free commissions for 60 days and 3 months free of DashTrader Pro trading platform. I've been using Centerpoint Securities for active day trading and short selling for many years now. So I'm very excited to share this amazing promotion with you guys. They are now available in Canada as well. So feel free to check out the promotions down below. Now let's get back to the video. So you're looking at the trades I did on that particular day right now. You can see CCCC, pre-market's already kind of started gapping down. Again, it's 9/11, so the market hasn't opened yet. You can see pre-market with a gap down. I'm scaling in slowly, 1,000 shares, averaging about 540s. I rarely trade pre-market, but this is one of the few setups that was take a dabble and start in early pre-market. Okay, fast forward now to the open. You can see I have an average of 1,500 shares short, the 534's average. You can see at the open, very volatile. This stock is a low float stock after all, so you gotta have to expect this much volatility. So you can see prior day's close is that 550s area we talked about earlier. And now we're kind of hovering around like 510, 520s mark. Like I said, my risk is going to be around that 560s, and yesterday's high is around $6. So that 40-cent range, I want to price in that risk because the stock is very low float. You can see at 9:33, 3 minutes after the open, the stock gets a little pop, testing that pre-market support area, 520s. I'm still holding on now to 3,000 shares short on CCCC. You can see at the bottom window here on the 2-minute chart, CCCC, the stock is getting bought back up. Testing previous day's close. Again, my risk area is $566. So if that breaches, you're going to see me starting to cut my losses. You can see I added a little bit up here at 540s-ish. I added 1,000 shares or so. Again, I want to be cautious for both long and short. So you can see I'm starting to cover. I covered just a little bit, realizing some of that loss at 550. So you can see I realized about $200, $300 worth of loss. In hindsight, I should have covered way more. I'm still keeping 5,000 shares because I added a little bit up here thinking that was a clear out. In hindsight, that was a mistake, definitely. I added back way too fast. So the mistake here is not cutting my position faster. Yeah, like if you look at this much volume, this is a good review session for me to review my mistakes. You can see this much volume being traded on a stock that's low float. I should have trimmed, like most of my 90% of my position right around here. So now 560s, you can see it skips to $6. I wanted to cover, but I was way too slow. So I covered up here at, this is like 590s. So I covered all of it, all the way up here. So for a second, it looks like, I covered at the top. I just realized about $3,200 loss on this stock. So I was out all the 5,000 shares. Definitely not very fun. And you can see, I was thinking, okay, maybe that's the top. This is where I definitely made a mistake. Second time now of adding back to my position way too quick. So you can see $6, I saw like some potential rejection. That's why I added back in 2,000 shares up here at 584. Again, don't do this. This is a bad trade. Okay, so you can see now at 9:43, I covered all the short on CCCC once again, realizing now tallied up to $3,500 of losses. Not fun. I definitely overtraded because you're gonna see I'm gonna retry this short again. That's the tricky part with these like small caps. You can say I just shorted another 1,000 shares at 580s because if for a second it looks like that $6 was going to reject. Stock squeezes through $6 to $6.13. I'm still stuck short 1,000 shares. Thank God I got out of the 3,000 or 5,000 shares I had earlier. I just have a starter of 1,000 shares left at 587. Average is painful to watch. You can see stock squeezes through 610s, and I covered right here. This is definitely like a cover in which I just covered and gave up. So not fun. So you can see stock squeezes through a little bit, definitely a little bit of a like emotional and like revenge trading at this point. I tried once again at 610s, then I realized it's just way too strong and I covered everything here at 620s. And at the bottom, you can see I realized a loss of $4,700, pretty much $4,800, almost $5,000 on the stock, if I'm considering the locate costs and everything like that. So definitely not fun. And you can see I've made so many mistakes trading the small cap stock. So going back to the trading view chart, you can see after I covered everything at around 630s, the stock actually went even higher. From 630, it went all the way to 8 because I guess there was a lot more shorts that stuck. And if you're too stubborn and you don't cut it, you're gonna get squeezed all the way to $8. And sure, you can see it came all the way back down from 8 to 5, but nobody could have predicted that. I didn't know that. You didn't know that. This thing could have went from 6 to 8 and to 10 or $20. So that's the silver lining on this terrible trade I did. Even though, yes, I lost $5,000 and it's not very fun, but I definitely learned a lot from this one trade. If I did not stop out, finally, after trying a gazillion times at 630, I would have gotten out right here at $8. And that loss wouldn't just be $5,000. That could have been $10,000 or even $20,000 if I kept on adding all the way to the top. Obviously, it's never fun to lose money, and it still hurts looking at the trading recording of my loss of almost $5,000. But I'm glad I realized that I was getting very emotional and I stopped trading this ticker altogether. Which brings me to the second step to fix your trading performance this year, and that is to acknowledge the impact of trading psychology and the importance of having the right emotional state. Upon reviewing my past trading journals, I realized a few things. First, I take way more trades on my red days, which is a sign of revenge trading. On the green days where I make the most money, I usually focus on just 1 to 2 stocks only, and I take very little trades. I had a bad habit of selling my winners too soon and holding on to my losers for too long. A few years ago, my top 5 longest held losers wiped out 43% of my profits on the year. So those 3 insights from my trading journal made me realize if I've already taken 2 to 3 losses, like the CCCC recording you just saw, I'm likely to lose even more if I keep on trading the same ticker. I definitely still revenge traded, as you guys saw in the earlier recording. But I'm glad I ultimately admitted my defeat and I was wrong and I got out before the stock squeezed to $8, which would have doubled my loss. So this is the reason I became really good at admitting that I was not in the right emotional state to continue trading late last year, and I will stop trading that stock that's losing me money altogether. Remember, there'll always be another better trade tomorrow to make money from, as long as you can survive today and keep the losses controlled. At this point in my career, I'm very aware that my trading performance is closely related to how well I manage my emotions. That's the reason I have the habit of recording my videos, not just to share with you guys for educational purposes, but also for my own personal review, for journaling and reflecting on both the losses and the wins. If you're enjoying this straight up real talk so far, please remember to drop a like down below. Step number 3 to fix your trading this year: position sizing and mastering exponential bet sizing. The third step and the most crucial technique that I'll be applying to all my trading strategies this year is position sizing. Most specifically, I'll be focusing on the concept of exponential bet sizing. This is a concept that Lance Bretstein, an 8-figure prop firm trader, talked about in my podcast last year.
Is this concept that I call exponential bet sizing. And this is always somewhat controversial because there's a lot of traders out there that believe every trade should be sized the same and stuff like that.
I see.
And it's like this huge debate. And the truth is, if you're able to differentiate whether one play might be better than another, and the example, I tend to love these poker examples, but if you're able to tell whether you might have pocket aces or pocket kings as opposed to an average hand, of course you want to bet better on those hands, right?
Yeah. Just like I've mentioned for years now on this channel, you should take position size according to your planned risk. If you plan on risking $1,000 per trade that requires a 50-cent per share risk, then you should take 2,000 shares. And the same on another trade that requires perhaps $1.20 risk, then you can take up to 833 shares. Now you understand the basics of calculating your risk before you take a trade. Now apply the idea of exponential bet sizing on top of that. Use 2x, 3x, or even 5x the risk on your A+ setups to maximize the best trades. As a trader with almost 10 years of experience now, I've been tracking which setup gives me the highest winning percentage and risk reward in the current market environment. I want to be prepared to take on exponentially higher position size and more risk on the A+ trades according to data. So that means if I normally risk $1,000 on most trades, then when it comes to the A+ setups I see once in a while, then I definitely want to size up and risk $2,000 or even $5,000 on those perfect opportunities. And while yes, that means the risk on those trades are significantly higher than most, I'm doing this according to my past data and statistics and trying to aggressively maximize the potential returns. So to sum up this third step to fix your trading this year for position sizing and exponential bet sizing, my recommendations are: first, know your most profitable and highest probability setup by tracking your strategy performance on your trading journals. Second, plan more than one potential entry areas to sizing or scale in to your winning trades at predetermined levels. Third, make sure to set concrete rules and criteria to allow you to take bigger sizes to maximize profits. Step number 4, identify dip buying opportunities in large cap stocks. Early on, I mentioned that we have observed more and more dip buying opportunities in the stock market since the last quarter of 2023. So the fourth step to adapt to this year's market is to identify dip buying opportunities specifically in large cap stocks and maximize the potential profits from this strategy. Now, enough theory. Let's dive into an actual dip buying trade that I took in January to demonstrate sizing into the best A-plus strategies as well as buy the dip opportunities that I've shared with you. In this trade you're about to see, you're going to see how I execute the dip buying loan strategy on Coinbase, totaling over $4,000 in profits during the morning session. At the same time, you'll also learn the importance of sizing in only to the A-plus opportunities. And for everything else, use less size or just your regular $100, $500 risk. Okay, you're looking at TradingView once again. The day we're talking about is this particular day, January 3rd, 2024, on Coinbase. You can see on that particular day, the stock actually gapped down huge, all the way to 144s. You can see previous day, this thing sold off from 170 down to 150. So next day, it's a pretty big and sizable gap down. So when you have this big of a retracement from 186 all the way down to 145, that's a big move, right? What we talked about extended move on the daily chart to the upside. At the same time, that sort of extension applies also to the downside as well. And since Coinbase is a large cap stock, you don't normally get that big of an extension up or down without some sort of retracement, some sort of pullback. So that's the whole idea of this dip buying strategy. You want to do that on big mega cap company like Coinbase and not on the small caps like CCCC. So you sold off on 3 days straight in a row. This is where we're approaching a daily support of, I was originally watching at 140s area, but there is indeed some support around this 144s over here. As you can see, stock has bounced off that same area once here, tested that area over here as well in early December. So you can see that 144, 145s area is a key level on the daily chart that you can use to risk off if you're looking to dip buy the stock. You can see market just opened. You can see that's a gap down we're talking about here, all the way to 144. That's the area I was looking at. The daily chart in the morning looks like this. You see, if you zoom in here, you see that gap, right, from yesterday's prior day's close of 156 all the way down to 144. So the stock is down more than 10 points overnight. That's where you have this gap on the daily. And technically speaking, anytime you get those sort of huge gaps, not always again, they tend to get filled first before moving another leg down. So that's also like the concept behind the dip buying strategy. So you can see down here, about a minute after the market opens, I actually got in a little bit too much, 3,000 shares. I didn't mean to do that. You can see that's why I'm gonna get out 1,000 of it right away and keep only $2,300 shares at 147's average. On the platform here, you can see SSR is triggered for the stock. So a lot of times that's beneficial for the longs. So I already got rid of another 1,000 shares. I want to keep 1,300 shares a starter. You can see stock is bouncing nicely from 147 to 149. That's like $2 per share. Really, really nice. Approaching 150, I scaled up a little bit more. Because again, I wasn't confident whether that big of a bounce so early on was going to be sustainable. You can see I'm already realized $1,800 on the day from just a Coinbase trade. This is one where I want to see if I can keep adding to my position and see if this thing goes eventually to prior day's close. That's obviously a big and aggressive price target. That's the reason I kept 900 shares and haven't sold all of it. If I were just looking to scalp $1, $2, I would just get out everything. But for me, I want to see if we can get all the way to 153, 154. That'll be a nice move. I added some more up here at 149. That gave me an average of 1,000 shares at 1,100 shares at 147.80s. I want to see if we can get more upside. You can see we're up nicely on realized $3,300 on the day. Again, I'm concentrated on this particular strategy, on this particular ticker right now. If you look at the bottom left window, I have another position open, 1,000 shares short on POL. Over here, you can see that's the chart on the top. It's not really doing much, and it's not my favorite strategy. So I know my performance on that one particular strategy is not as good as the daily support dip buy. So of course, it makes more sense for me to keep adding to the A plus strategy, which is a daily support dip buy, and on stocks I know that I can give me a higher win rate. So just now, I just sold even more at 152 on Coinbase over here. I think I just sold another 200 shares or so. So locked in $2,700. I'm up unrealized $4,000 on the trade. In hindsight, I should have just sold everything and locked in that $6,000 profit. But I'm really trying to let my winners ride this year. So basically, I'm just saying POL, you can see I'm getting out of that stock, realizing those losses and not adding to the position because it's not my best strategy. I've taken big losses with that, especially with CCCC, $5,000 loss. So I want to make sure I'm concentrating my mental energy, my focus on a strategy that's working right now in front of me, which is on Coinbase, the daily support dip buy. You can see I just sold everything here at 150s, realizing $4,700. At one point, unrealized, was $6,000, but I didn't lock it in. So I definitely gave back some of the profits, unfortunately. But once again, that's the reason I want to push this one strategy a little bit more, because I've seen times before where the stock goes all the way back to prior day's close to 156, 157. At that point, I'm not going to be happy if I sold everything at 153. So that's always a balance, right? I'm trying to maximize the potential expected profit, but at the same time, I don't want to give back too much doing that. So you can see I'm still waiting for that 400 shares to work out. But at the same time, you can see on the top, I opened the short position, 400 shares short on Moderna after closing my POL for a loss. That Moderna trade is a separate short setup that I trade once a while. But again, you're going to see that I'm not focusing too much of my energy on that second trade on Moderna. You can see on the top, I'm adding slowly into that Moderna trade, but the concept is the same. I want to make sure I allocate most of my size into Coinbase in case this does do a huge breakout and I want to add into that position. That's the concept of exponential bet sizing. Again, size into the best of the best setup and everything else use less size or 50% or 30% size. This is one of my favorite long setups to trade. It doesn't happen all the time, but when I see it once or twice a month, I will trade it with more size, and sometimes I'll trade with multiple trading accounts. I actually go over this strategy in detail in a free crash course. There's a link down below if you want to check that out. The fifth aspect of trading I want to work on this year is to invest in trading resources and tools that can help improve my trading. At this stage of my trading career, I've already developed a few strategies that I can rinse and repeat. However, now I want to invest my time and effort in backtesting each of these strategies on a larger sample size of stocks from the recent years. By doing this, I'll be able to actively update stats of my trading strategies according to the market trends, which can help me decide on which stocks and setups to focus more on. It can also help me decide which strategy to size in more aggressively or avoid a particular strategy or setup altogether. Here are some useful trading tools that I recommend and I'm personally using. First one is a back testing tool, Spiky. I have a short demo on this in a previous video. I use Spiky to optimize my trading strategies and find the highest win rate and risk-reward setup and entry points. Next is my scanner and newsfeed. I pay for Trade Ideas and Benzinga Pro to speed up my trade planning process. And of course, don't forget a trading community and education. You don't have to trade alone or figure out trading all by yourself. Consider joining a community with daily watch lists, pre-market trade planning, and strategy webinars, and so much more. For beginners, I have a complete guide on the top trading tools you can use for free. You can check out this video and learn how to use the tools to improve your trading this year.